Cryptocurrency trading is one of those professions or disciplines that gets a lot of people excited. Everybody is interested because it gives you the freedom to work and make money from wherever you are in the world, and also the gains you can make from this market basically laughs or make everything else outside of crypto almost seem like a joke. You can look at the profits you can generate in Forex or in the stock market, in real estate, even working a job. Most of these things cannot come close to the type of gains you can find in cryptocurrency. And also, there's a lot of good stories of people who have made it big in cryptocurrency starting with very little, like myself. But the question is, if cryptocurrency is that exciting and people make money, why does your friend, or maybe you yourself, why aren't you making money in crypto? Why aren't most people making money from crypto if it's that easier or attainable to everybody? In this video, guys, I will give you 5 main reasons of why you are not making money from cryptocurrency. Or the other person, the other friend or relative you talk to who said, oh, I tried crypto and I lost money. It might be simply because they did not know these 5 things. So if you're watching this video, make sure you watch to the end because I will drop so much knowledge that will help you to become more profitable. The number 1 reason is lack of strategy. Most crypto traders or wannabe traders out there, they have zero strategy. You can ask your friend who claims to trade crypto, what is your strategy? Most of them, I bet you, they will not be able to tell you a strategy at all. What is a strategy? A strategy is a fixed plan to achieve a profitable outcome in the market. And that a strategy is something that can be repeated multiple times. So if you have a strategy, it means that you can be implementing the same strategy multiple times, and then you can measure how profitable or not it is. But most people don't even have a strategy at all. And when you hear strategy, it might sound like some grandiose, complicated ideal, but it's not. It's basically just a plan of why you're entering your position, when do you call it off to say it's a loss, when do you take profit, and what kind of variables should change for you to also change your mind about the trade. But again, most people do not simply have a strategy. And reason number 2 of why most crypto traders don't make money is lack of knowledge and understanding. This is a world of new technology and it changes basically every day. It's constantly evolving and it requires an adequate understanding of certain concepts that drives this market. The more you understand those kind of things, the more you understand the type of risk you're taking also and the flaws that are associated with the cryptocurrency that you're trading in. This can be technical knowledge. It can also be legislative knowledge, understanding the law and how it might apply to the said cryptocurrency. But most traders get into this market, or investors, they get into this market simply because their friend told them about a coin and then why this coin is going to go up. That's all. They basically become a fan base of a certain cryptocurrency without looking at the facts whatsoever. So I always recommend a good foundational beginning in this market. It used to be simply you get into crypto, you buy Bitcoin and that's it. And then the market became a little bit more complex now, right? So it's worth it for you to sit down and learn, understand all these different protocols and what they mean and what they stand for and where are the risks. Grab a course on Udemy, grab a course at cryptouniversity.network, my platform where you can learn how to understand the market as a whole, which will give you an edge when you're trading, right? It doesn't matter where you learn from. My whole thing is that a lot of crypto traders need to sit down and learn the market. Reason number 3 is quite obvious: emotional trading. Okay, now let's look at the average trade. And look, I've been guilty of this myself at the beginning when I was just getting started with trading. Emotional trading got the most out of me. And in fact, I've said this before, my worst trades were the ones that I was trying to revenge trading. I was trying to revenge trade. What does that mean? Emotional trading simply means that you're projecting however you feel from the inside, you're trying to project that to the market. It can be both two extremes. It can be either you have a goal to make $20,000 on this trade, and now the profit is at 16,300 now, but that is still open. And you can see that the market structure is changing. Maybe things will start reversing and you decide to hold on to this position because It's not $20,000 yet. It hasn't hit your target. And this is an emotional target. It's an arbitrary number that you made up, has nothing to do with what's going on in the market. Therefore, you wait it out and then you lose the entire profit and then you end up losing money. That's an example of emotional trading. Or you have lost money and you can see that things are changing. The market is more likely not going to reverse to your side from a rational perspective if you do technical analysis, but because you're at a $6,000 loss and you don't want to stomach it and walk away with a loss, you just keep on holding on the position because you're waiting for the market to reverse until you break even, and then you end up losing 50,000. All right. So that's actually, in fact, this is, I think, the most important one. It's emotions. Trading is not really that complicated. The technical tools, you might be confused by the charts when you see them, but trust me, if you take my course, for example, you understand the charts within an hour. It's just historical data. But when you're trading against yourself, your own emotions against you, profit and loss. And the more stoic you are to these emotions, the more likely you will be a successful trader, because it's not really that hard to predict whether the market is going up or down, right? There are so many variables you can look at to predict that, but whether you're going to stick to the positions when your emotions are being affected by the numbers you see on the screen, it's a whole different game. That is trading, in fact. Being able to deal with that is trading. The fourth reason to why most crypto traders lose money is inadequate risk management. This is related to point number 3. Risk management simply means that you understand that you're partaking in a risk and there is a probability that you could lose money. It might go left or right. And if things go bad, it goes against you, at least there is a limit to how much loss you're willing to partake in. Otherwise, if you don't put together risk management and your idea of a trade, of closing a trade is only when you're winning, you will end up losing all your money. It's insane to me when I see a trader opens a position an hour ago and it's red and then they're freaking out already. You just know that, okay, bro, like you went in here into this trade without any understanding or accepting the fact that it could go against you. That's reason number 4. And again, when I mention risk management, it might sound like it's this fancy thing that's complicated. Not really at all. All the platforms that we use for trading, Bybit, Binance, OKX, they all have risk management tools available for free. Stop losses and different type of order types that will help you to control your trade as much as you can. Reason number 5 of why most crypto traders lose money is failure to keep up with market trends. What do I mean by this? Look, the market is ongoing. That's why prices are never stable. They're always up and down. They react to the phenomenon of what's happening in the social phenomenon whatsoever. But now, if you're not keeping up with that, then you end up losing money because you don't know when to make a move, when to react, when to strike like a thunderstorm. Let me give you an example. XRP, Ripple, was sued by the SEC, and since then, this coin has never been doing well. So obviously there are so many Ripple holders that know about this story. Maybe they lost money in it because of that, but they never sold. But someone who was paying attention to the market trends and the news and what's happening with that coin, the moment the news came out, they decided to sell. Or I can give you another example when FTX was going bust, or Luna, a cryptocurrency that had a huge community worth billions of dollars. Lots of people lost money, even though we saw it coming slowly, because they were not even paying attention. They were not in the market. They buy the coins, they invest, or they open positions, they forget about it completely. You always have to keep your ears to the streets. Understand what's going on in the world. What is the Fed doing? What are the interest rates? What's the new bill being proposed in Japan or in the US that might affect the coin that you're holding, the position that you have, and so many other reasons. Look at Twitter, look at CNBC, and so many other variables. I mean, make time, 30 minutes a day, where you literally just sit down and gather some data about what's going on in the market. Join an alpha group like the Crypto University one. Link is in the description, because people are constantly discussing things that are happening in the market, and you need that kind of leverage to keep up with market trends. All right. Thank you guys for watching. I'll see you in the next video. I hope you find this helpful. For those of you who would like to be trained to become a trader and you get training from me, link is down in the description. Fill the form, and if you qualify, then you will become my student. For those of you guys who just need courses at Crypto University, link down in the description. If you want to get started with trading, I have platforms down here. I have OKX, I have Bybit, links in the description. You use my links, you get welcome bonuses, plus more. I'll see you guys in the next video. Peace out.